All right. What is up, traders? What's up, tycoons? Super excited for today's video. We got to talk about Palantir. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. All right, we're going to take a look at the Elliott wave structure, right? And if you've been following the channel, we actually went above our bullish price targets. We did have a look above and fail, and we've started to pull back. We'll go over the structure and the key levels of support we need to maintain. We're also going to zoom out and take a look at the weekly chart, and you can see we have a nice cup forming here, rejecting our 61.8% retracement level. Very, very important level. If we do get a pullback and start to form a handle, this could send the stock much higher in 2024. All right. But, I do have to warn you guys, and we do have to be prepared of any bearish scenarios. So we will go over a cautious pattern to be aware of known as the bump and run and break that down in today's video as well. Now, if you guys don't know, I actually just started a completely free newsletter. All right. It's called Investment Intelligence. I'd really appreciate it if you guys subscribe. I'm giving out really good knowledge about, just finance and the market in general, and also giving out free trade ideas in those newsletters, right? And we talked about one of them in the newsletter was actually SWK. We talked about the rising wedge here and, some of the possible price targets and price action. And you can see it's breaking down. We'll dive into that a little bit more later, but there's a link in the description or pinned comment down below. You can sign up for the newsletter completely free. We're also going to go to Simply Wall Street and take a look at some of the fundamentals of the stock. So we're going to do a nice technical analysis overview. And then after that, we'll head into the fundamentals and really dive behind the scenes of Palantir. And that's going to be with today's sponsor, Simply Wall Street. You can get a 14-day free trial, so there's completely nothing to lose with that free trial. You're really going to love the platform. I definitely promise you that. And if you don't want to pay, then you just can use that 14-day free trial. If you do choose to sign up, the first 100 people get an amazing 40% off. Okay, so if you purchase the annual plan, that's less than $200 a year. It's a great resource. I've been using them for a while. Definitely glad to have them as a sponsor. Now, let's take a look at our Elliott wave structure. So after completing our 5-wave structure to the upside, it makes a lot of sense that we're getting a correction, right? Now, a correction is going to be an ABC correction, right? That's what we're looking for here is going to be an ABC, our ABC right here. If you're not familiar, the market tends to move in 3-wave and also 5-wave structures. So you have your 5-wave impulsive move here that we got. And now we'd be looking for an ABC correction to take us down lower on the price of Palantir. And then we would be looking for another 5-wave move to the upside after we complete our ABC correction. So right now, 1530 is a big level of support. We would be expecting some type of a bounce here soon. Okay. And at that point, we would be looking potentially for it to come up to 1720 to 1783. Okay, but it could be more shallow, right? It could be a shallower B wave, and at which point, if we break through our 1530, 1377, and 1224, those are going to be the real key levels of support here that we'd be targeting for our C wave. Now, if we break below 1224 and we flip this area from resistance to or from support to resistance, we need to be mindful that there's a gap all the way down here to $8 on Palantir from its earnings 2 earnings calls ago. All right, these gaps, they tend to fill about 90% of the time. The big question is when they're going to fill. So it could be months, it could be years before this gap fills. But if we see a strong reversal and a super strong sell-off, it's very possible that this gap could fill sometime sooner. Okay. But right now we're not paying attention to it. We're still above 1224. If we break and flip that to resistance from support, then that's when we would have that gap fill potentially on our radar as a possibility. Now, there were a couple signs that we were starting to get ready for a pullback, right? Notice how price action is going higher here, right? We're making these higher lows, we're making these higher highs. But when you look at your RSI, remember, this is your relative strength index, you can see we're actually trading in a more of a bearish channel here, right? So price action is expanding here in a bullish megaphone. Price action, or the RSI here, is expanding in a bearish megaphone pattern right here. So when you see price action making these higher highs, right? High here, higher high here, but you see the RSI making a high and then a lower high. That's a simple term known as bearish divergence, and it's an indicator you may see some type of a pullback. So the bearish divergence combined with the overall market sell-off is the reason that we have started seeing a significant pullback in Palantir, but they really just reported an amazing earnings, right? Now, a lot of people expected the price to shoot up. Okay. But Elliott wave is a good way to, fight through a lot of the noise in the market. Okay. Whether it's earnings, whether it's CPI, whether it's PPI, inflation data, Jerome Powell, and really just get an idea for the overall scheme of how the market's going to work. So that's our Elliott wave structure there. Here's our weekly cup and handle, right? So we've got this cup forming from 2029. That was old support over here. We broke through that. All right. And now it's new resistance over here as well. Something very notable. We mentioned the 61.8% level on the other chart. This is our 61.8% level of resistance. So on the last one, we were bearish when we were going to, flip it from support to resistance and head down below. Here, we're going to be bullish. As soon as we can flip $20.29 to support from resistance, we're going to be bullish and we're going to be targeting the upper levels of the range here. Okay, right around 27.50, all the way up potentially to even right around here at about $30. Okay, so those are going to be the essentially the next area of liquidity once we break above $20.29. And we talked about having this pullback. You can see we're holding this 1476 level, holding above there pretty well. Okay, we could just consolidate sideways. That would still give us a handle here. Or if we pull back further and get more of a deeper retracement here, okay, we could come back down right around to that 1250 area that we talked about on the last chart. Okay, so look for those as some possible, some possibilities. If we start to pull back, find support anywhere within these areas, and then come up and break out past this 2029, that would be a very textbook cup and handle on the weekly time frame. Keep in mind, time frames are very important. So this is a weekly chart. We would not be expecting this move to happen overnight or within one single week. This pattern, this development would take most likely, at least a month or a couple months. Okay, you would see, 1 weekly candlestick, 2 weekly candlestick, 3, 4, 5, 6, 7, 8. So this could take, a couple months to fill out and possibly identify this structure. But this is something you want to keep in mind. Now, over here we have the bump and run pattern. Honestly, this is one of my favorite chart patterns to trade. And at least in 2023, it's been really, really useful. Now, this also is on the daily time frame right here. Okay, and again, you can see that negative divergence I highlighted earlier, a little bit clearer here, right? We have lower highs, we have higher highs. Now we're getting a bump and run pattern here. If you're not familiar with the bump and run, this is what it looks like, right? So you have your prevailing uptrend, and then you get this massive bump up in the price, right? And essentially, once you break this bump trend line, it's very possible that that price action runs all the way back down to where the pattern began. So, that would be our bearish scenario here, and that would definitely take us down here to this $8 gap fill that we do have to fill. So we definitely want to be very mindful of this, okay? Just because this pattern has started developing, this pattern can break structure at any time, right? If we trade sideways and then come back up, okay, and then trade sideways again and go back down, that's going to break the structure, right? If we come back up and get back above this trend line, that's going to break the structure. Or we could just come down here, all right, and seem like it's going to play out all the way and then find support, all right, and start to rally again. But this is definitely something that you want to keep in mind as a possibility. And you want to pay attention to this, okay? Because if this plays out, it's going to cause Palantir to drop over 50%. So, I'm not predicting that it's about to drop over 50%. We went over some bullish chart patterns there. We went over the key retracement levels. We're getting a healthy retracement after such a massive rally. I mean, this stock, guys, was less than $7 just in January. Okay. And it ran up almost 300%. Or about 200% from $7 up to almost $21. So it makes sense, right? And this may seem like a very dramatic pullback if you're buying in here at the top at the 20s. But hopefully this video is helping you guys prepare yourselves and inform you guys on how to, find good areas to buy. Okay. And when, good times to avoid buying is when you spot those divergences, those negative divergences. Now let's dive into the fundamentals. Let's hide it on over to Simply Wall Street. Okay, so here we are on today's sponsor, Simply Wall Street. All right, checking out Palantir. Now, What I really love about this platform is that it goes over the rewards, okay, some of the possible rewards, but it also goes over some of the risks as well. And we're actually going to dive deeper into these, right? So it says it's trading at 53.4% below its estimate of its fair value. So we're going to come down here and go to the valuation, and you can see it only gets a 2 out of 6 here, and we'll dive into why that is, right? So what we're going to do is when you actually take a look at the price to sales ratio versus its peers, right? The peer average is at 12.9 times, and Palantir is trading at 16.2 times. So it is a little frothy at that side, but one thing you have to keep in mind, Palantir, a lot of people are investing in it because they think it's going to have huge exponential growth in the future. So it's not uncommon for you to pay, a higher valuation for something that you believe is going to have, high exponential growth in the future, right? That's very common to see actually in the market. And so some of these valuations, at the end of the day, it's up to you to decide if something is actually overvalued or undervalued, right? And so by the price to sales metric, you could say it's overvalued compared to its peers. But when we take a look at versus the industry, you're going to see something very similar again here, right? You're going to see it trading at 16.2 times versus the industry average of 4.5 times. So, why would they say that it's 50% undervalued, right? And so this is where you can see it, all right? The share price versus the fair value, you can see that currently it's 53.4% undervalued. Now, we just looked at the price to sales ratio and it seemed like it was overvalued. But using a discounted cash flow model, right, you can see that they actually have a fair value of Palantir at $33.10. Now, what did we talk about in a chart pattern in the very beginning of the video? We talked about the stock potentially heading back up to that $30 area. So some of the technical analysis is also lining up with a discounted cash flow model giving a fair value price on the share of Palantir. Okay, you can see the analyst price targets for the future as well. Another great feature on here. You can see that it was a lot lower, right? But as the year progressed, okay, you can see really since the beginning of 2023, the average analyst price target has actually gone up by a big amount. Okay, it's actually rapidly increasing for Palantir, and it wouldn't surprise me if we continue to see this acceleration from analyst price targets, up higher into the future. Especially with the AI revolution that we're having right now in the market. All right, we can take a look at some other things here and take a look at the forecasted growth. Okay, so we talked about, Palantir being a growth company, and you can see it actually gets a great 4 out of 6 on the forecasted growth, right? It scores check marks on the earning versus savings rate, the earnings versus the market rate. It's got high growth earnings and the revenue versus the market. The only place it gets an X on is going to be the high growth revenue and the future ROE. This is your return on revenue. Okay, so we can take a look here and take a look at the earnings and revenue growth forecast. All right, revenue is going to be in blue, earnings is going to be in green, and you can see that the forecasts have a very, very good uptrend here, right? You can see that the revenue has been in a strong incline, and analysts are expecting this to continue into 2025. Earnings actually weren't really that good up until late 2023. Or basically this year, 2023, the company is actually profitable now, and the CEO announced that they plan to be profitable for the rest of the year. So that was a really, really big moment. Another big announcement from Palantir is that they are looking for inclusion into the S&P 500. If that happens, that's going to dramatically boost the price of Palantir. Okay, that's one of the biggest catalysts in my opinion. If they can get included to the S&P 500, think of all the IRAs, think of all the 401ks, think of all the people that are just constantly dollar cost averaging into the S&P 500, right? They're doing it blindly. They're not doing it because a new company is getting added. They're not doing it because a new company is getting taken out. Index investing and really just passive, index investing where people are having it come out of their checks every week, every 2 weeks, or maybe they're just putting in a certain amount every day or once every month. That's going to If that happens, okay, Palantir is going to be one of the 500 stocks that receives inflows from all of those 401ks and all of those dollar cost averagers. That's pretty much it for today's video. Smash that like button, subscribe to the channel for more. Don't forget, I got that newsletter, guys, completely free. All right, giving out good knowledge and also identifying possible trade opportunities, right? This was that trade opportunity that we went over. This is SWK, Stanley Black and Decker. All right, and we talked about how we would be looking for a breakdown, another push up, breakdown, and ultimately how it could head down here to potentially $85, but that we weren't going to be targeting the full move. We're just looking to get some of this move down, and you can see we moved down right here at this line. We've already started to bounce a little bit, and then we would be looking for some more continuation to the downside, targeting 92.35. There's a link in the description or the pinned comment down below. You can sign up for that newsletter. Feel free to share it with your friends. Don't forget to share this video with your friends as well, or other people that you think may enjoy it if you found it useful.